Electric vehicles are driving a multi-billion-dollar lithium bonanza. EVs are set to be 40% of all car sales over the next decade, and the world needs to double its lithium supply just to keep up with demand. Welcome to I See Your Trade. I'm your host, Alex Holmes, standing in for Pamela Ambler. Soon we'll be joined by our special guest, Dale Henderson, CEO of Pilbara Minerals, the world's largest operator of an independent hard rock lithium mine. First though, the world's biggest electric car maker, Tesla, had record sales last year. EVs are expected to make up a third of all new car sales in China, and the magic ingredient that powers all this? Lithium batteries. I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Dale, let's start with Pilbara Minerals. The company now has a market cap of around 15 billion Aussie dollars, and the extraordinary growth of the share price really kicked in during the pandemic. What happened there?
Yeah, hi Alex. Yeah, what happened during the pandemic was a lot of governments chose to stimulate their EV industries through offering subsidies, particularly through Europe and in some parts of North America. Now that really fueled a lot of buying in EVs. Shortly thereafter, the Biden administration particularly started to come in with some quite progressive measures for new energy, which included fueling of effectively EV buying. So the combination of those factors really supercharged the demand for EVs and very much converted it from what had been historically a China-driven consumption story to a global consumption story.
And you have Australia, which is the world's largest lithium exporter, and Pilbara Minerals, which has the world's largest independent hard rock lithium mine. What makes Australia such a lithium hotspot?
Yeah, there's a few things there, Alex. First and foremost, Australia's just incredibly well endowed with resources, whether that's iron ore, gold, but also critical minerals such as lithium. Secondly, Australia is first rate as it relates to the extraction of minerals and concentrating and processing of minerals. So the combination of those two things have come to bear in the case of lithium, and where Australia finds itself as a major supplier globally for lithium at this point in time.
And I think it was Elon Musk, Tesla's founder, who called lithium a license to print money. How much lithium is going towards electric vehicles?
A lot of lithium is going towards electric vehicles, and the forward curves are pretty amazing as to the structural deficit we see emerging. It looks like a lot of assets will have to come online to serve that demand, and what that means for the existing operators, of which Pilbara Minerals is one, and there's not many of us major operators. We've got this enviable position where delivering this much needed resource for this insatiable appetite, which is EV demand. So puts us in a good place to yield some really strong returns, and that's what we've seen particularly over the last year.
And a kind of a good thing for the world. How important is lithium in terms of the world's push towards decarbonisation?
Yeah, lithium plays a really important role in that it's an energy storage solution. And as the world looks to decarbonize, different types of energy storage is required. And lithium, and the lithium battery specifically, has a very unique combination of high energy density, safety, and recharge efficiency, the combination of which is feeding a number of demand sets, of which the EV subset particularly, it serves that area well.
And about 80% of the world's lithium goes towards batteries. Do you see other uses for lithium in the future, or just more and more cases for the batteries themselves?
It looks to be batteries principally is where this new demand set for lithium is coming. And within that, it sort of subdivides to principally EVs or e-mobility. But there's also a mass energy storage market also sort of coming forward. So the combination of those things is pulling on lithium demand. Outside of the batteries, there is a number of other use cases around lubricants and medicinal type requirements, but by proportion, that's pretty small.
So this rapid transition to electric vehicles, it isn't just happening in China, is it? It's a worldwide phenomenon. What are we seeing in terms of growth elsewhere in the world?
Yes, very, very much a worldwide phenomenon. And as in terms of lithium demand, EVs speak to the major sort of demand set. But outside of that, there's a number of other use cases for the lithium and lithium battery, whether that's e-mobility, scooters, surfboards, but also mass energy storage. So many different use cases are coming to bear, and they've all got different growth rates and different extensive adoption, but it depends very much which market and which area of the globe.
And do you have a good sense of how much this growth is being driven by consumer demand versus government policy initiatives?
Yeah, the split as to what's fueling the demand depends very much on the location. In the case of China, what we've seen is historically, around the years of 2016 to 2017, it was principally subsidy fueled. Fast forward to today, it's very much consumer driven and very much an organic demand as a function of EVs being a superior product that customers would prefer to buy over ICEs. So very much depends on which location, but I think the trend is moving from subsidy to consumer driven, based on that fact that they're just a better product to buy.
Clearly, China is a key driver of demand. Do you see this continuing, or do you think things are close to plateauing?
China remains a massive part of the demand set for lithium, but I'd say it's very much a global story now, and what we're seeing is many other countries and regions really starting to pick up the pace. So I think China will remain a really big consumer, but by proportion, it's probably going to diminish relative to the growth we're seeing elsewhere in the world.
And moving from kind of the demand side to the supply side and peering a bit further into the future and looking at the long-term projections for electric cars, some people are forecasting that EV sales will more than double in the next 5 years or quadruple in the next 10. What does that all mean in terms of ramping up the supply of lithium?
Well, Alex, we need lots and lots of lithium. Many of the assets which are out there need to come online, and if you believe the projections, well, there's still going to be a massive structural deficit. That's pretty exciting. As one of the few major operators, looks like we're set for an incredible future, given that we're at the start of this adoption curve.
And in terms of delivering that supply, I mean, some of the major car makers are entering offtake agreements directly with lithium producers. Does Pilbara Minerals have any direct offtake agreements with car makers?
Historically, we had a short-dated offtake with Great Wall Motor Company, who was very progressive in their moves some years back. But subsequently this time, no, we don't have any car company or OEM offtakes at this point. Principally, it's all with the chemical conversion industry partners.
And with these offtake deals, am I right in saying that they're a relatively new thing, and we don't, for instance, see offtake deals with iron ore producers for steel? But what makes lithium so different?
Yeah, Alex, I think the offtakes agreements that we're seeing between the car companies to the raw material supplier speaks to the shortfall that these car companies are seeing. And many of these car companies are, of course, augmenting their business from internal combustion engine to EVs, and they see the shortage emerging. As such, they're in this race to secure their supply, and offtakes is a means by which to achieve security of that supply. So it's pretty amazing to see. It's far removed from building a car to be engaging in offtakes with miners, but every day we seem to see more of these offtakes being inked.
So it sounds like supply is pretty tight. I mean, some forecasts indicate that global lithium production is going to have to increase by a magnitude of at least 300% over the next 5 years. Can Australian lithium suppliers keep up with demand?
Yeah, if you look globally, lots of lithium assets needs to come online. As to Australia's contribution, I think Australia is poised to really capitalise on this opportunity for several reasons. First and foremost, it's incredibly well endowed with more lithium resources, so that will come to bear in the years to come. But secondly, Australia's ability to develop these assets, bring them online successfully, there's an established reputation. So I think the combination of those reasons, I think Australia will continue to hold a very large portion of the lithium supply pie, so to speak. And meanwhile, I think other domiciles globally will probably struggle in speed to match Australia's supply growth.
And it would be really interesting to hear, what are you at Pilbara Minerals doing to keep up with that demand yourselves?
Yeah, well, we are foot down, expanding as rapidly as we can. We have 2 FIDs signed up to execute circa almost $1 billion worth of expansion, which we're executing right now. That'll double our supply pretty much over the next 18 to 24 months. And hard to believe we'll effectively be doubling our supply from where we are today. And we're already approximately 8% of the global lithium supply at this point. So we're going flat out, Alex, is the short answer.
And in terms of the overall resource, the amount of lithium available, is it just a matter of ramping up production, or is supply going to hit a limit at some point in time?
Yeah, great question, and one that many analysts wrestle with is, where will all the supply come from to meet this demand? And many of the forecasts show a deficit, particularly out at 2040. So there isn't, if you believe that, not enough lithium has been discovered yet. So, but that being said, many exploration programs are underway, so we'll see what unfolds in the years to come. It's a great market, great industry, so there's plenty of groups looking to find assets and bring them to market, but it will take quite a few years.
So of course all this activity seems to be driving up the price of lithium. What's your expectations for its price over the next 12 months and maybe a bit further ahead as well?
That's a difficult one to answer as to where pricing goes, but whilst there's a structural deficit, we could expect some strong pricing. It's certainly what we've seen over the last 12 months, but I wouldn't want to take a guess as to where pricing will be in the near term. As to the long term, we're actually incredibly positive about where pricing will go as a function of that structural deficit that we see.
And in a bit of contrast, prices of Chinese spot lithium carbonate seem to have slumped this year, but is that perhaps a bit misleading?
Yeah, I think what we've seen there, Alex, is very much some circumstances particular to China. A combination of Chinese New Year, a build-up of stocks, and also some internal combustion engine, deeply subsidized cars, which has competed with EVs. Well, all of that sort of played out over the last couple of months, but that seems to be sort of passing us now, and what we're seeing is an uptick now in the Chinese pricing, which is now sort of coming backwards and upwards to the pricing that we see outside of China. So we'll see how it unfolds, but the gap seems to be closing.
And you mentioned you're pretty bullish on the lithium price in the medium term. There's some analysts such as Macquarie predicting that it could go as high as $57,500 per tonne by the turn of the year. What's your view on that?
Well, I think anything's possible, particularly when you look in the rearview mirror and you see some of the highs which exceeded $70,000 per tonne. So clearly batteries were being sold at those prices. So it seems reasonable to me that prices could return to those high levels and potentially beyond. I guess we'll all wait and see.
And there's lots of consolidation going on in the market. I mean, your competitor Liontown got about 3 takeover offers in the span of a few months, and they rejected most of them. What's driving the M&A activity in the market?
Sure, I think what's driving it is the race to secure these critical minerals. In the case of Liontown, Albemarle's approach to get hold of that asset, I think speaks to demand, and it speaks to security of supply. So well done to Liontown. It'll be interesting to see how that unfolds in the months to come.
And in Australia, a lot of people have become very wealthy on the back of the lithium boom. There's a new wave of millionaires and billionaires thanks to lithium. Even Pilbara Minerals, your stock was only a few years ago a relative penny stock, and now you're at a $15 billion valuation, give or take. Is the growth done, or is there still a lot more upside ahead?
There's plenty of upside to come, Alex, and of course I would say that, but what I would highlight is, we've got one of the largest assets globally. The current run rate is half of what we were planning to go. We're doubling effectively from this point to move up to 1 million tonnes per annum. We're deep into a partnering process to do more integration downstream, which will yield more value. And meanwhile, lithium pricing's been pretty high, and the business has been yielding strong margins. And look, if the structural deficit continues, well, that looks set to continue. And the combination of those factors, a lot of growth to come for Pilbara Minerals. And if we get it right, who knows, maybe we'll start to step outside of our base asset. But by the way, no rush on that front. But yeah, plenty of blue sky to come.
Big thank you to our special guest, Dale Henderson, CEO of lithium miner Pilbara Minerals. IC Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Thanks for joining us, and we look forward to seeing you next time.